everybody, and a warm welcome to today's conference call. Next to me is Andreas, our CEO. Hello, Andreas.
Hello.
Nice to have you with us. This morning we published our Q3 and 9 months 2023-2024 figures via press release. It can be found on our website. Andreas will now give you an update on the business development and the strategic outlook of DATAGROUP. This will be followed by a Q&A session. We will explain the procedure on how this works in advance. I now hand over to Andreas. Thank you. Please go ahead.
Yes, welcome everybody. Very warm and at the moment I mean warm, really realistic. We have quite hot temperatures around Stuttgart, around our headquarters of DATAGROUP here at the moment, and you see we have a bit casualized our dress code already. And I'm very happy that we even this summertime and hot temperatures have a lot of participants, nearly 30 participants I see here in the call, also for the English version now in the afternoon. So what will we do for the next hour? We will of course give you again, like all the other calls, a short update about how the business is running, what we are doing within DATAGROUP, running our CORBOX business, but then of course also commenting our Q3 figures and the 9 months figures, like Anke said, which we have published this morning. For those who might be at the first time in the call, I again and still would also give a short introduction to DATAGROUP, to better understand our business model and what we are doing. DATAGROUP, we are the leading German IT full service provider. We are focused on mid-sized German companies and organizations, and for them our focus is running the IT. So not at the first step doing project business, doing trading business. Our focus is really run the IT, and the good message about this is even in challenging economic times as we have it them now, running IT is a quite stable, very solid business, as companies have to keep on running their IT, of course, nevertheless how the business is going at that time. We are doing this using our CORBOX portfolio. CORBOX is a full service setup of IT services. You see it here on the right side, set up from 9 service families, which more or less are all service families, and behind them about 40 single services, which you can combine them modularized to run your IT. And these services in the CORBOX, our CORBOX services, have a quite high level of standardization. So they are very standardized, so good to produce for us. On a high level of quality for the customer, but also to an attractive price for the customer. And that's something where we have developed DATAGROUP quite successful the last years. And at the moment, for example, we are working on the 7th generation of the CORBOX portfolio. So we are all the time also renewing this portfolio, following the latest technological trends, like things using artificial intelligence or security technologies, which we are this year building into the CORBOX at the moment, but also always updating the state-of-the-art cloud technologies. And with this business, we have a quite stable long-term business, as for our customers, we are typically running long-term contracts. A typical CORBOX contracts has a duration of 2 to 3 to 5 years, depending on the customer. And these 3 to 5 year contracts, of course, makes the business very plannable, very stable. Beside this run business, we are also doing the projects for our customers. So these services always give us a good potential in cross and upselling additional IT services, IT projects to our customers. With this business, we are actually doing about more than 500 million in revenues. We are coming to the actual figures later, and we have about 3,500 employees, more or less in Germany DATAGROUP is following a kind of a made in Germany IT service strategy. So about 95% of these people are working in Germany for our customers. So that's our positioning, that's our business model for DATAGROUP, and that's the basis for the development and also our success. We think also our Q3 is really showing. So we are overall very satisfied with the latest numbers, because in our opinion they are showing how good also in challenging times this business model is working. What are the highlights about the Q3 figures in the last 9 months? Looking on the figures, we have a sales growth in Q3 compared to the Q3 of last fiscal year of 7.5%. And I think this growth is, especially in times like this, not self-understanding, not typical. Still having a growing business in a market like Germany. If we compare the 9 months, we have a growth of 2.9%, also on this long term, and even having a quite special Q1 in the last fiscal years with some special effects. Also seeing this growth of the 9-month periods, I think it's a good and satisfying result, which shows that our new strategy with focus on more on organic growth is working quite well. And we also are quite confident about this strategy in the future, because when we look at on our order entry, we have a good results in the last 9 months. We have about 23 million in new business with new customers and around 18 million in cross and upselling. And these numbers are always annual based. So the 23 million means 23 million additional annual contract volume for new customers, and also the 18 additional services of 18 million per year in the future. So that are quite good news in our opinion for these 9 months at the moment. And if we compare this also to our operational targets we are following already for the last years, it shows we have still a very good running business and a good performance in our market. Because our targets are something like year on year 10 to 15 million annual additional revenues from new customers, another 10 to 15 million annual revenue from cross and upselling. And the numbers on the left side you see here, we managed to overcome all or both of these targets with this 18 and 23 millions already up to now. And we have a record year compared to the last years, with this overall 41 million additional business we put on top of our existing revenues in the next months. That's an absolute record for DATAGROUP, and that shows IT service business is quite different from project and trade business in the area. In these areas we also see some weakness, but for the services it's running quite good. And I think the reason for this is that outsourcing IT services to a provider like DATAGROUP, especially in times like this, is also a good measure to handle the challenges these times are bringing with it. And that means we have a development of our business which is not this typical for the pure or overall economic trends. Of course, it also means continuing this growth model also means renewing contracts. Our target there is to renew 20% of the CORBOX orders annually. At the moment we are with 38, not totally in line with a full year target already, but of course that's a figure which is also not totally up to us, because it's depending in which period which contracts are ending. You can't just renew whenever you want, you have to renew it 1 year to several months before the contract ends. So that's a figure we are also totally satisfied with at the moment, as we renewed this year all contracts we wanted to. The second, but at the moment not this dominating or important growth column, is the inorganic growth, so the acquisition of companies. In the past, it was much more important to also add additional revenues by acquiring companies. And now, where we are stronger focusing on the organic growth, the inorganic growth, the acquisition of companies, is more focused in finding special targets which will help us to grow faster in the future. So we have a much more focused acquisition strategy with special profiles, like getting into additional regions we are not present at the moment, or acquiring additional technologies we are not capable up to now. So with this more specific acquisition strategy, we are also totally on track with the acquisition of 3 companies at the moment: IT Total, Conplus, and ISC. We have 3, and we see our targets for this year fulfilled with these 3 companies. To give you a bit more of an insight what means this organic growth track and the acquisition or the winning of additional customers, I have here a short overview about 7 new contracts or prolongation and upsellings we have just made in the recent months. And you see a lot of contracts have to do with the investment areas we are working at the moment. Is, for example, the wood and wholesale company or the chemistry companies. They have both ordered cloud services at DATAGROUP with more than 2 million annual contract revenues, which will come up there, and both are paying on or resulting from our cloud investment strategy also, because some of them are also using, or they are also using our new cloud technologies we've set up in the recent months within our investments. Another example is the cybersecurity win we have here from the universities. I will explain this one a little more later, but we also see SAP or BAföG applications, so also application services we have, which is more and more becoming important within digitization, also running digital applications, digital processes for the customers. So this field is also growing quite good at DATAGROUP. And if we are asking what means these additional contracts in additional revenues, when will this growth show in the top line as a revenue growth? Then you have to keep in mind that in the IT service business, it's always the first step to ramp up these services after winning a contract before they will come into revenue. Especially when we are following, like we do, IFRS standards, the complete transition period is not ending up in the revenues, as they are kept or put on the total contract period, these revenues. So the first moment of getting the revenue from a contract is something like 9 months after signing it. So the contracts we have just reported about now, you see it here in this red area in the figures, they will just now start to be boarded and then come within the next months into the contract. So if we go, for example, on the June column, you see at the moment we are somewhere in between 3.5, 3.7 million when we are looking on the order entries from the last 2 years and the actual fiscal years, something like 3.5, 3.7. That's what within the numbers at the moment. And when we are following the next months, you see it will rise with the existing order entries. It will rise to nearly 5 million. So we have another something like 1 million about to come in monthly contract revenues. And that means our quarterly growth track will continue also the next upcoming quarters. That's what this figure is showing. And that's important to know that the result in revenues is following with a certain delay the winning of the contracts. So we are quite confident about fulfilling our targets within the upcoming months and the last quarter of the fiscal year. And with the light red area, you see we have still 2 months to go. And with these 2 months, we are still aiming on winning some more contracts. We have still something in the pipeline to really end up with a record order entry year, which we have already now. But our target is to get even more. So we have a good backlog of new contracts coming up within the next months and paying on our organic growth. Of course, we still also have, and we have reported this in some of the last calls, also our headwinds. We have this year 16 million headwinds from transformation revenues, which are going out of the revenues compared to the last fiscal year. But if you compare it with this chart and also with other good business development we have in the non-CORBOX areas, we have a overall growth as we can very good compensate these 16 million on an annual basis. If you see where we've started here in October 23 and where we will end up in September 24 for this year on a monthly contract level. So our business is at the moment running quite good, and as I said, especially for the actual environment all over economic environment, I think that's quite remarkable. But to be sure that we can continue also this for the last years, we have also reported that we are investing in special technology fields this year quite heavily. And that means we are investing this year 6 million in future technologies, especially AI, cybersec, and cloud services. And with these investments, we want to pay on the future accelerated growth and also on a successful development of DATAGROUP overall. As in the IT services, you always have to keep track with the new and the latest technologies. And you saw on the win chart I have shown before, a lot of these services are results from our cloud investments as they are using the latest cloud technologies we've set up with these investments. And for the other two, AI and cybersecurity, I now want to give you another short insight how these investments are paying back already in a smaller portion, and what gives us the confidence that we are totally on the right track with these investments. The first step, I have here a small chart coming from our AI program, and it's showing how the number of tasks automated with our HIRO technology has developed. HIRO is the DATAGROUP own AI technology, our own AI model, which we have acquired mid of last year. You might remember in August 23, we have acquired HIRO with the idea to use it as our own AI ops technology. It is called as a specific word, as our AI ops technology to automate our IT service production. And of course, it takes some months to get everything up and running in our IT landscape, in our production landscape. But since January 24, we've started to automate tasks. And we've started this especially in the service desk in the first level support area. And after some months with quite small numbers, we see now a quite very exponential growth in the numbers. So in July, we have now over 7,000 tasks automated on a monthly basis. So these 7,000 that are more or less like tickets, which are done automatically, the red ones, or at least semi-automatically, the gray ones on this setup. And that's really helping us to deliver more capacity, more services with the same team. So when we are growing with new additional customers, with new IT services, AI technology in the future and already now helps us to really deliver these new contracts and not being or being in the situations that we have to hire all the people before being able to deliver. And that's what makes AI and this automation so important. And we have not made a kind of a forecasting what will happen there in the next months. But what we see already now, we are still on a very good track in training the AI technology with additional tasks every week. And these additional tasks will continue having this exponential growth, because you can imagine every task is added to the already existing knowledge of the model and helps us to have more and more tickets being handled automatically. And there we still see a very big potential of additional automation rates. For an overall idea, we are handling every year 700,000 tickets, means something like 6,000 or something like that per month. And so you see here we are already over 10% of the tickets which are we are handling using AI, and there's another potential of nearly 90% additional automation we can address with the technology. And in our opinion, we are on good track there, and we are working on this every week, also for the upcoming month. Another insight from our investment strategy is cybersecurity. As announced, I now would like to give you a short insight in the contract with the North Rhine-Westphalia universities. It's a combination of 24 universities from North Rhine-Westphalia. And they have sat together and said, we want one provider which is helping us with our cybersecurity to have a critical mass of workload, which is worth to choose a professional provider. And this contract means 1.4 million on an annual revenue base for the next 3 years. And DATAGROUP, we have won these contracts because of our investments in cybersecurity. A lot of these services which are included here were not on the level which is now necessary for this number of users and assets. And we had to set up this with our investment in advance in the last year. And we did this, and one of the results is winning such contracts. Of course, we have also some more of this type of security contracts in the pipeline, as we have set up these capabilities now following our investments. And that's also showing quite good how, if we have set here on the right technologies, how contracts and new business is following. And we are, as I said already, also very confident that there will more customers following. A lot of cybersecurity demand is in the pipeline at the moment. Okay, so some slides bringing you some insights into our business, how this has run, including the last 3 quarters. And as I said, overall, we are very satisfied with this period, especially if we are looking around this in the overall economic situation. it makes us happy to have a business model which is based on such a stable demand there. That's of course not the situation for every company. So we are quite happy to be in this situation, and we are also very confident for the upcoming months. Also, if you follow this ramp up rate we have shown on one of the slides before. When we look on the pure numbers which are reflecting this, is on the first line now the Q3 numbers compared with last year's Q3. We have the sales growth due to these new customer ramp-ups, and a growth from 7.5% is quite good in these times, I think. And what you also see is that the trade portion is rising a bit higher than the rest, and that's something I would like to explain a bit. It's not because we are rising trade business again, pure trade business. This trade part that are sales which are related to rollouts of new CORBOX customers. So if we set up a new CORBOX customer, we often are also bringing out additional client hardware, additional network hardware at the customer sites, and that in our books are shown as trade revenues, and that's the reason for this. And it's quite high margin business related to the CORBOX business. You also see, if you are looking on the gross profit line, we have increased this by 10%, even more than the top line, and that's showing that's not coming from pure low margin trade business. Instead, that are really the new quite profitable CORBOX customers which are driving this development. When we are looking on the 9 months period, we are also seeing this trend. As I already said, with 380 million, we have a 2.9% growth on the top line. What you also see on this chart is the growth in personal expenses, and that's exactly the place where you can see our investments. The experts we have hired for AI, for cloud, for security to set up the new services on the one hand and automating our IT service production on the other hand, they are on this line, and you see that of course has also an impact on our result, on our EBIT. But even with this growth, we still, in personal expenses, we still have a quite good EBIT margin level of 8.4%. Not as good as in the last year, and also in absolute figures a little bit lower. But that's the area where you see that these investments are also having a result on. What you also see on these charts are the rising financing costs due to higher interest rates. They have fully hit in the Q3 now, as we have renewed most of our financings with new contracts. Also, of course, then dealing with the latest interest rates at the moment. And for this situation, we are much more in detail managing the necessary financing volume, as the cost has on a relative level has grown much more compared to the last years. When we come to the balance sheet, we see, of course, another step of a rising goodwill compared to end of last fiscal year. This increase is coming from the acquisitions in this fiscal year. I've named them Complus, IT Total, and ISC. We also see an increase in financial liabilities due to these new acquisitions, but also with a temporary effect of a declined factoring volume. We are just renewing the factoring process, the factoring approach. So we will see a small decline in this area again. That's ending up in a net financial debt compared to the EBITDA of a factor of 2.0. Maybe we'll see in the next months a small step back when we are rising factoring. Again, it will depend on some other factors, of course, also. Okay, and the last slide, watching the 9-month periods in terms of cash flow. We have a quite still solid operating cash flow. It's carrying this decline in factoring volume, which is something about 4 million. So if you would add them, it would be a very comparable cash flow from operating to the last 9-month periods. When we go to cash flow from investing activities, you on the one hand see, of course, the payout for the acquisitions, the 3 companies with 27 millions and another 12 millions invest in CapEx, which is especially linked to new contracts and the rollouts these new contracts are bringing up. We will also see an additional increase from these investment cash flows linked to rollouts in the next quarter, but that's a bit special for this fiscal year. I think that will come back again to a bit of a lower level again in the next fiscal year. The financing cash flow shows the inflow from our financial activities in these 9 months. I think that should be clear. And if we combine all these figures and look into the next and already started last quarter, also when I'm looking on July, which we have closed within the last few days, we are quite confident that we'll fulfill our guidance for this year. So the revenue guidance from 510 to 530 overall. And if you're calculating this combined with the 380 we have year to date, you see we need another growth for the last Q4, which will be fulfilled from the further upcoming contracts we have just shown. And we see if also this, of course, will depend on how fast the transitions will now go. And that's the reason why we can't exactly say where we will end up, closer to 510 or closer to 530. That will also be part of the progress of these transitions, how far they will come until end of September. For EBITDA and EBIT, we also see a good fulfillment of our guidance from this 77 to 81 in EBITDA and 43 to 46 in EBIT. So I think that's in these days a very good message to be able to confirm this guidance for the full year. So that's our update up to now. And as I said, I'm very confident for the last quarter, and we are working hard to give good results also on the full year then somewhere in November this year, where we will bring up the full figures. And up to then, I would be happy to meet some of you on one of the conferences we will still have in September and November, which are shown here, or at least then hear you in our November update call after closing the full fiscal year. So thank you up to now for here. And I think we go to the Q&As now. Okay.
It seems everything has been answered in the call so far already. So thank you so much.
This, yeah.
Yes, very happy about this as well. So thank you all for your attention. Thanks for joining. See you again in fall. In the meantime, you know where to find us. Just send me an email. I'll be happy to assist, and hope to see you at one of the conferences or at one of the next events. Have a good rest of the summer. Thank you so much. Bye-bye.
Thank you very much. Have a good day. Thanks. Bye-bye.